Hello, everyone. Mike Hucknall here, co-founder, Pat Trading Partners, along with Bob Iacchino. Quick gold update. So, if you don't subscribe to this channel, don't know why, but please do consider ring that bell and hitting the like button. And why would you want to do that? Because we did cover this pattern on one of our live streams, and you're welcome to tune into any of our live streams and ask questions, or watch them on replay. This is a traditional double bottom pattern confirmed with the move on Friday, triggered actually with on the 4-hour. Right here, we require a close to trigger, not triggered on the daily officially until yesterday. Gave plenty of opportunities, nice little pullback. The pullback area we watch for is a pullback between the wicks and the candles, coming right back there with the rising rotation zone. And now, first target's already been hit today. Gold is very, very strong. 1708, 1723. And then the slightly lower probability because it exceeds the move that started at 1737. The real question is this a long-term bottom? Probabilities say no, but anything can happen. So this is why we raise a stop and take some profits at some key levels. And what am I looking at here? Let's just focus on the daily chart. You see we had a harmonic down here and we had a triple bottom. Is a triple bottom traditionally a reversal pattern on the bigger sense? No. This double, though, because it was reversing this key move, is completely valid. Now, we have major overhead resistance up around the 1735 area right in front of the final target. You can see topping out area at the beginning of October, topping out area about mid-September. Let's now take a look at the bigger chart, the bigger time frame. We have a concept called the rotation zone. It is still against the rotation zone. You see last turnaround into the rotation zone, and the rotation zone is the yellow and blue lines. No, we do not trade moving average crosses. We watch for rotations in that zone. It helps us fine-tune trade levels. So into the rotation zone, rotation down, into the rotation zone, rotation down, rotation zone, rotation down, back into the rotation zone right in front of the second target. So we still have a fair amount of overhead pressure. Also, our second target is right by that rotation zone. So a great, if you're trying to play this for a longer term bottom, a fantastic area to move up stops again. So what are the levels behind that? I mean, if you're going to play this now, remember this is major. This 1750 area is major. Why? It was a prior key support basis becoming significant potential resistance. So even if this comes up to the 1750, there is a lot of work to do to get through that level. I also talk about with metals, silver, gold. It's a fantastic thing to trade around the core position. If you want to know what a core position, I do have a video up on this channel from Mike's Crazy Classroom. Just do a search for it. And I talk about what it means to trade around a core position. Why? Because you can slowly build a position, take some off onto rallies, and then on pullbacks look to reinitiate on bottoming patterns or at very key levels. This would just be a rally. This is not, at this point, a breakout to say, hey, this is going to new highs. This is going back to 2000 yet. And I don't mean the year, I mean the price. This could easily stall out in this range and roll back over, which is why we like to unwind some of the position. And if you're looking for a longer term position, at least raise your stops as it goes in this direction. That's what we have right now. By the way, weekly cycles have a room yet to run back to the top. Daily cycles are running back to the top, and it is getting overbought. Now, it can easily get more overbought. Back to that daily, just to recap, substantial overhead resistance here. Another key target, if we do get above 1751 and this area has more legs, I will give you some more target areas to keep utilizing. You had a prior breakdown level back in May and June. You see it was broken in July. Came back, retested. So concept prior support becoming resistance. The resistance area held, selling off. Now, why is this level even reinforced? This is what we call a cluster. We have a 200 simple moving average, which is an area zone. We also have that prior resistance becoming, or prior support becoming resistance that was confirmed back here, 1808. So on a bigger target, if you're holding out for more, then that is the next key target area. When would I really start focusing on that target area? Above 1751. Only on at least a daily close above 1751, preferably a weekly close above 1751. These levels also on the way up can be used for support on pullbacks. For example, this 1670 area is now key support. If we do break below that after we complete this pattern, that would also be a quad bottom. And my next target's down, which is very important. This is why we like to trade it around the core position. The next key target area is the 50% harmonic. We use harmonics versus fibs. The 50% harmonic and a harmonic projection between about 1580 to about 1570. So if we roll over again, that's the next key area. We will look for a potential reversal signal. That should give you a pretty good idea for both your upside and the downside levels for gold. Again, if you like what we do here and you want some high quality technical analysis from an over 30-year market veteran, I started back in 92, please consider subscribing, tuning in, and attend some live streams with us. Talk to everyone later. Bye for now.